So stock indexes, as represented by SPY and QQQ at all new all-time highs. Just trying to get a sense on, is it truly being led only by a handful of stocks, or do we have a little bit better participation than perhaps prior bull market runs? And as it looks here on the equal weight Russell, things look okay. Basically 4 waves with a push and a breakout here, bull flag into the 90 EMA. We'll see if we can get some renewed upside there to start to challenge those prior all-time highs. But on the face of it, not too horrible. We could look at traditional breadth indexes on perhaps some of the weekly reviews. Let's look at small caps. Small caps on the Russell, similar picture, right? So you basically still have those 4 waves, 1, 2, 3, 4, position lower on the chart, trying to challenge into the mid, having bounced off the midpoint, challenge that 200 mark on the IWM. You still have considerable resistance at 210, even should you clear 200. So just something to keep an eye on for any potential frothiness, let's just say, on the near term for SPY, if we begin to have trouble on sort of those IWM, RSPs. Otherwise, really the story for 2024 has been, up equities, even against up rates, right, on the 10-year, here's hitting that 420 level we referred to previously, and up DXY. So healthy, perhaps sustainable, so perhaps there's more room to run in both TNX and DXY. Hopefully in some sense not, right, from a risk aspect perspective, particularly if you're thinking crypto and Bitcoin, which the 20-week correlation is seems to average around like 0.7, 0.8 type thing positive to SPY. So not really wanting to see too much trouble with stocks in terms of also wanting sympathy plays within crypto. That 90 EMA on the daily there really keeps kind of ruling the roost. The demand zone did give out on Monday. I'm sure you're already aware by now. 1, 2, 3, 4, 5 basic wicks into that, and that was enough. You test it 5, 6 times. It's a bit much. Seemingly bear flagging, waiting for that 90 EMA on the daily to come down once again. So anybody's guess as to how deep this goes, still within the context, particularly on log chart, it's just yet another sort of 20-ish% pullback as we had in 2023. For the fibs, perhaps looking at that 36 mark might make sense for any demand zone. So we'll see. We'll see how much longer it has to go, particularly for long-term positions. It's not a huge concern. ETH, though, did lose its 90 EMA and in pretty dramatic fashion, right? So ETH BTC, we did talk about when it was seemingly bullishly consolidating that what if we did get a retest down to 0.055, that is, and we did. So a little fast, a little quick. We'll see if this hold here can really scoop out a base and try to reclaim that trend line off that weekly pattern, just as one way to try to visualize, what's happening here. So the weekly is kind of nice. It'll give you your heads up on there, the medium-term moving average. So we'll see if ETH can continue to outperform, or perhaps was that it on seasonality? You just had those 4 days off the PR, and that was enough to give you your positive January seasonality. But it would be nice to see some follow-through into February. I think finally we'll just mention, rates looking okay even on junk and corporate bonds for the moment. Oil itself, no shortage of headlines, and there hasn't been for a while. Looking at a weekly chart, hugging that 200-week moving average with the first initial push and test again up into that 50-week moving average. So we'll see how much longer. Technically, this can continue for quite some time in order to really challenge out that trend line. But just know that it does look like oil is doing its darndest to try to hold that 70 spot. So that's it for today. See ya.